Hello and welcome back to another great episode of hashtag Screw the W2. And today's guest is Don with Happy Camper Capital. I hope I gave that enough pizzazz when I named it off. But Don joins us from the great state of Idaho and was yet another individual I networked with and connected with on LinkedIn, thanks to Yona Weiss. So shout out to you, Yona, if you're listening. Don, welcome to the show.
John, I'm pleasure to be here.
Yeah, you bet. No, maybe you can just take a step back for my listeners and viewers. Before you started your entrepreneurship business, what was your previous W-2 or normal job, and what was a normal day like?
Yeah. Well, so I guess prior to this, I spent almost pretty close to 19 years. We'll say 20 years, round out.
Okay.
Almost two decades basically. Worked for a financial company that does back office support for investment advisors. So it was
Okay.
definitely involved with like the securities industry type of investing, and I myself was pursuing a career in that field as well long ago. I was studying to become basically a financial advisor, portfolio manager, or something like that. I have degrees in finance, banking, investment science, portfolio management, and accounting. And
Okay.
so with all that, I was planning to pursue a career in that field, but once the 2008 market crash happened, that's what kind of made me decide that maybe it's not for me, and
Hmm.
to change course. I kind of hunkered down, stayed with where I was at because I had a secure job, and then was planning to figure something else out later.
Gotcha. Sounds good. So what was the when you obviously spending about 19 years in the industry, was there like a pivotal moment or a day or time you remember that like I got to get out of here, I need to find something different than this, or what was kind of the awakening moment for you?
Yeah, well, there were several of those moments. Honestly, there was
Okay.
early on, even before I was in that job, even it was I've had when I was younger, I'll say in that high school age, um, I did very well in school. I had very high aspirations for myself. Said, hey, yeah, I'm smart. I'm great at problem solving. I'll become a millionaire by the time I'm 25, no problem, right?
All right.
Was my intention. When that did not happen, and I ended up being making much less than I'd anticipated ever, and um, as my family grew and our expenses grew and our debts grew, it kind of things to build up and kind of weigh down on you, and make just feel depressed. And so there were several times where I felt like, you know, I, what am I going to do? I first was ready to give up. I was like, there's nothing more I can do. Just suffer through it and you know, get through it till I die. I guess was kind of
Sure.
the feeling, right? Um, but there were some times I'm like, yeah, I've got to do something to change this. I've got to, that's kind of where I went back to school later and pursued those degrees. And then, when the 2008 crash happened, I actually went back instead to get that accounting degree. Figured, well, if all the, finance jobs are all gone, there's
Yep.
still accounting. So I went back and got an
Right.
accounting degree, planning to get the CPA at that point. But, I started studying for the CPA as well, but I just honestly never really liked accounting. So I was like, I don't really want to do this. My intention, I guess, at that point was really I could take my studies from the financial side of things, the investment side of things. I was also studying for the CFA. I was like, hey, if I get a CFA and a CPA, then I could maybe open an office that can offer both investment services and accounting services.
Okay.
But in the end, none of that came to fruition. Just life happens. We'll say, unexpected medical costs and things kind of just kept piling up, and um, it wasn't until honestly I didn't know what to do. I was like, I don't want to go back to school for more, schooling, more
Sure.
education that doesn't not going to really get me anywhere anyway. I didn't want to go get a second job or something like that. And so, because I already not see my family enough as it was, because the job I had, I was still working a lot of overtime. So I was working like
Mhm.
probably 55 hours a week was pretty much average. And
Wow.
so I was like, yeah, I didn't know what to do. So for us, my wife is always a stay-at-home mom as well. We never wanted her to be out working because there's no point in her working just to pay for a daycare to take care of our
Yeah,
kids. So
yep. A lot of
yeah,
people have ran into
yeah.
that.
So it wasn't until at that time our third child had started school. Now she was home alone for a while, and wanted to do something, but we wanted to have her a job that was flexible enough that she could, be available when the kids are sick or during summer, whatnot, to not stuff pay for a daycare. Um, and for some reason, I don't know, to me, something I saw or heard, I mentioned to her maybe being a realtor and
Okay.
have a decent income and the flexible hours, and she gets to talk to people, which she likes doing. And so she researched it, looked into it, and decided she kind of liked it and wanted to give it a try. So she by the time she passed her licenses and got registered for that, was about when our fourth child was born also.
Wow.
So she was able to still do it, of course, carrying a baby around. But what really set us off now was that when she got her license, almost immediately she started working with investors as her first clients.
Okay.
And that's kind of what got me really to uh, want to learn more and look into it, and read books about it. And so that was kind of where I had that, I guess you'll say, it's aha moment that perhaps real estate could help us get there. I still don't know how to do it yet or where to get the money from to do it, but I was like, there's got to be a way to do it, right? So that was early, I'd say 2012, maybe 13.
Okay.
But about the time we decided this time we lived in Omaha, Nebraska still. So about that time though, we also made the decision that we needed to move to Idaho to help take care of
Okay.
my mother who moved back here after my dad passed away. And her health was declining, so we wanted to be close to her and help care for her. So I kind of put all that on hold. Said I don't want to be buying a property here and then all of a sudden be long distance trying to do something with it. I wasn't educated enough to that point to handle that. So
Sure.
I just put it on hold and waited until we got to Idaho. We moved here in 2015. Took about a year or so to get situated, I guess, and got back into the grind of learning more and finding out more. And then after I discovered Bigger Pockets, which has been a resource for a lot of people, I think
Yep.
I greatly increased my education and my motivation and found a way to get creative financing. I leveraged my 401k, took a loan for my 401k. I used a local lender with a 10% down payment and purchased a fourplex here in my area in
Okay.
2017. And that's really what got us off on the start. The way I looked at it, I was like, it's a huge risk taken for my 401k. Yeah. I didn't
Yep.
have any savings to back us up, but the way I looked at it is like I really had no other options. It was either
Yep.
take this risk and make something happen of it, or just continue down the path we were heading with increasing debts and probably facing bankruptcy at some point, and complaining and suffering through all that. The hardships come with huge debt. So I was like, it's this or nothing. We got to give it a
Yep.
try. And so of course, look at I learned my numbers well. I could analyze the property well. I knew that there was potential that could be ran well if I did it right. And so yeah, I kind of just trusted my numbers and gave it a shot and went for it. And here we are, 5.5 years after that, and I was able to leave my W-2 through real estate.
Nice. Okay. Yeah, and I definitely can relate to that. My first investment property was a fourplex. Worked with a local lender, and I found out you could take money out of a Roth IRA tax free. So I had one since I was 19. I took
Yeah,
out my
nice,
contributions. That was the bulk of our down payment, and yeah, that was well, 6.5 years ago at the time of this recording. So, but
nice.
so with obviously had the additional moments, you kind of went all in, start with the fourplex. Obviously, you have Happy Camper Capital, which we can talk about more at the very end here. But overall, like, what was or do you remember your last day at your W-2 job or when your freedom day was?
Well, yes, my last day was December 29th, 2022. So just
Okay.
about a month ago.
Very recent.
um,
Okay.
yeah, very recent. Yeah, so when I bought that first fourplex, I gave myself a 5-year goal. I said within 5 years, I want to be able to leave my W-2.
Gotcha.
Whether I do or not, at least I want to have the option to do that. And I'd say about even 3 years into it, I wasn't sure that I was going to make that happen. It was the 2019, 2018, 19, the I guess the space became much more competitive. Every offer I'd
Yep.
make, I'd get outbid by 100,000 every
Yep.
single time. I'm like, this is crazy.
Yep.
And so I was like, I wasn't able to really buy much else. And but then I kind of just through networking, kind of stumbled into some of their opportunities that I had not planned for or expected to come into, which was more commercial type things. I got in some development projects, a land flip deal, and then got on with a local team here that does build to rent multifamily. So I kind of got with them first before I got with Happy Camper,
Okay.
um, and then just as I was looking for higher cash flows, again, for me, my goal was to get out of my job. I wanted to have, so I needed to produce income. I didn't necessarily look for appreciation that could come 5 years down the road. I
Right.
wanted
Yep.
income now, right? And so
Appreciation
I was
doesn't
looking
pay the
for
bills.
exactly. I was looking for the highest cash flows I could possibly get now, and so in that pursuit is how I came across these RV resorts and campgrounds, which do produce very high income. And so I was pursuing that to at least invest in it, and then initially because of where I live, close to Yellowstone Park, right? There's a big camping area, and so I figured there's got to be people that would buy campgrounds around here. So I started
Sure.
networking with, yeah, I started networking with people in that space and going to webinars, trying to, if nothing else, connect with someone that wants to buy here in the area, and I could possibly be their boots on the ground and can help get my foot in the door a little bit and get a small piece of something and learn from them. That was my intention initially. But then I met a couple of guys that had just bought their first property and were looking to grow their team and to do more and expand. And as we discussed and talked about our common interests and goals, everything seemed to align, I guess. And they invited me just to join with them. And so
Cool.
I again took that leap of faith again, and saying, I didn't want to look back, 3 years from now. I was like, am I going to look back and regret not taking that chance? Because it's not, say, multifamily or something else that I was more familiar with. And I figured, what have we got to lose? I might as well give it a try. And if it works out, great. And if it doesn't, at least I tried
Yeah.
and I won't regret it. Right. So I joined with Happy Camper Capital at near the end of 2021.
Okay.
And, and so I've been with them now for a little over a year, and we've had an amazing year so far, and we're looking to do even more this year. And yeah, so all
Cool.
those things kind of combined really added a lot to grow my wealth, producing more income. That first fourplex I bought again in 2017, I early in, I guess it was 2022. I don't remember now. I refinanced it.
Okay.
I did a cash out refi.
Yep.
So again, on that property, I put $26,000 down on it. That's all I put down in 2017, when I bought it for like 265,000, which is like crazy. Can't buy a single family for that price now. And of course it's increased tremendously since then. But I refinanced it, pulled out over $100,000 on a cash out refi. I
Wow.
could have did a lot more, but I wanted to make sure I maintained my cash on that property. So I
Sure.
only
Makes
pulled out
sense.
the
Yep.
maximum. Yeah, I pulled out the maximum I was comfortable with to still get a decent cash flow. So that property still cash flows about 1,200 a month right now.
Nice.
But I pulled out well over 100,000 from that property to try to reinvest it back into more real estate to continue to grow that income and wealth. And that's kind of how I learned quickly to how to just get that velocity of money and keep stacking it, and not just take your income and go buy a new car or something that people do.
Exactly.
Right? I'm like, I don't need those things. I need to grow my income. That was my
Yep.
my goal. Later, those things come later once I'm safe where I'm at. But
Exactly.
yeah,
No,
that's with things, just things like that. I look for opportunities, and I take those calculated risks on I guess smart opportunities when they come my way, and don't just pass them over because it's not the thing I'm focusing on.
sure. No, it makes sense. So, well, since we're, at the time of this recording, it's been about a month since you said goodbye to the W-2. Any regrets from leaving the W-2 and taking a step past that? What's been the best part of your journey since you left then?
Yeah. Well, again, it's only been about a month so far, so I really had a whole lot of time to, I guess, let it soak in just yet. But
Sure.
I can say that I at least now, because I was doing so much juggling both for quite a while, especially in the last year. While I was with Happy Camper Capital and going on podcasts and talking to investors and trying to schedule all that around my work hours. It became
Yep.
very difficult and complicated. I'd use my lunch hour to do podcasts or other interviews, and
Yep.
so it was very stressful. And then I'd work late hours into the night, again, going on networking meetings or talking to investors, trying to schedule or use as much time as I possibly could, which again took away from my main goal, which was to have more time for my family.
Sure.
So it got to the point where I was like, I've got to just, make a choice, choose one or the other. I can't keep doing both. And so obviously I chose to leave my W-2 because, that's, trading time for dollars, whereas at least with the real estate side, I have more of a unlimited potential as far as what I can do. And the things I was able to do with such little time I had allotted for real estate in the last couple of years anyway, I knew that if I have more time, I should be able to just explode that and do even more.
Sure.
So yeah, I decided kind of late in the year. I was like, I've got to leave my W-2, but I had to have a few things in place first. I had to have some check boxes. My wife and I talked about it, that something to make her and I both feel comfortable. And that was one of those, was to have at least a year's worth of expenses in a savings account. So
Oh, sure.
our minimal living expenses, paying our house payment, food, the kind of basic stuff. 1 year's worth of that in an account that we don't touch for anything else, just for
Yep.
that usage and nothing else, just in case, things don't work out, worst case scenario type happens, there's no income, we can at least survive for at least a year. While we try to make things work or figure something else out. So that was number one thing that we had to check off, and I can say I was able to meet that once. As soon as I had that money in the account and ready to go, that's where I was like, okay, now I can let my employer know, because I was planning for it for a while. I was like, I couldn't make it official until I had that ready to go.
Mm-hmm.
And so the day I got that money in the account, which came from a previous property that came more came full cycle, I was okay. Now we can pull that trigger. That same day I sent off my resignation letter and tell them, yeah, I'm leaving. I wanted to give at least a month notice, but just the timing didn't quite work out. So I still gave them
Sure.
about 2 weeks. I gave them a little over 2.5 weeks maybe notice. So, hey, sorry, I'm I got to leave the end of this year.
Yep.
They all kind of knew it was coming, because of course I talk about real estate a lot, and I
Sure.
did an April Fool's joke on them a couple years ago, and I said, "Hey, I'm leaving. I make money in real estate now." So they kind of knew it was coming, but
Yep.
we're hoping it wouldn't, because I was an integral part of the team there. But again, I had to do it for myself, and what's been great since, honestly, is just that release of stress.
Mm-hmm.
Not trying to juggle both and work extreme hours. Again, so with my wife, we decided to put on some time blocks. I'm going to treat this like a job. So I
Yep.
have my start time, my end time, my lunch time. We separate a time that we do exercises every day now, because again, that was something we used to do during my lunch hour, but as my lunch hour got took over, that didn't happen anymore.
Yep.
And so yeah, now we're back to doing a regular exercise routine daily, lunchtime daily with my wife, and a cutoff time. So if I have my on my calendar, nobody can schedule before or after certain times. I block those off.
Okay.
That's now family, personal time, whatever. So I can't say yeah, I could be on a call at this time at night when I'm not available. I got to treat it like a business job. So I'm not open those hours. So those have been some big things that have helped, I guess, just to overall reduce that amount of stress,
Okay.
and get me in, I guess, better physical and mental and emotional health, I think.
Sure.
So that's been, I think, so far, that the biggest benefit is just that, honestly.
Okay. No, it makes sense. So, all right. Well, as we wrap this up, Don, I know I obviously got a busy day and many things to take care of. As a final note, any big projects you have coming up in 2023, or if anyone is maybe interested in learning more about you and Happy Camper Capital, what's the best way to reach out?
Yeah, well, as with Happy Camper Capital, yeah, we have a lot of projects expected to come up.
Okay.
We currently do have a 506C fund available for accredited investors,
Okay.
which we are continuously raising for. It's a fund that plans to hold at least 5 to 8 properties in it.
Okay.
We expect to close on about one more here the next month, another one a couple months after that, and then much more after that. But we currently don't have any 506B opportunities available, but we have in the
Okay.
past, and I would say we will in the future as well. I'm also, again, as I said, I'm also with another team that does that build to rent multifamily. So that's also something that may be available that somebody could look into if that works for them. That's kind of one of those building wealth long term, not cash flow now, but that long term
Yep.
wealth building. So
Exactly.
I now focus on trying to do both. I get the income now from the RV resorts, and then the wealth later on, like basically a retirement account with the build to rent stuff.
Yep.
And so those are the two things I focus on, and I can help share those things with people as well. And of course, the best way to get hold of me is I'm very active on LinkedIn. You can find me there, or obviously visit happycampercapital.com. You'll see the About Us tab. You can click on that and then find my name and picture there.
Okay.
Click on my information, and there at the bottom right of that screen, you'll see a link to schedule a call with me over Zoom or a phone call if you want. So you can reach me like that, obviously by email, don.spafford@happycampercapital.com. But yeah, those easy ways to find me.
Sounds good. All right. Well, for all those listening, watching, you can. Don's got his email address in the background, so feel free to reach out. Don, it's been a pleasure having you on the show, and thanks for sharing your story on how you screwed the W-2.
My pleasure. Thanks for having me.